All right, well, some experts, of course, as we said, had predicted a debt deal that would send the stock market soaring, but just the opposite has happened.
The Dow is now on the longest losing streak since 2008, and we turn to ABC Business Editor Dan Arnall to explain why stocks are sliding. Good morning, Dan.
Rob and Tanya, the Dow's 8-day losing streak started as Congress was trying to solve the nation's debt ceiling crisis. So why didn't the downtrend stop once the president signed the bill? Traders immediately turned from the nation's potential default to the slowing economy. A report out on Tuesday morning showed that consumers cut back their spending during June, and last Friday a report showed the GDP was growing at a snail's pace from April to June, after an even more miserable first quarter increase. Economists say that 2 quarters of sub 2% growth means a recession within a year, almost half the time. So those worries push traders into a selling mood. That's unlikely to change unless there's a big surprise on Friday. The July jobs report is due out, and investors are hoping that companies added more than the 84,000 new jobs they're expecting. Beating that number might turn the market sentiment around. Rob and Tanya?
Thank you, Dan, for that. Pretty scary stuff. I mean, already the South Korea stock market slid nearly 3% in trading this morning, so not looking good overseas.
And Tokyo and Hong Kong seeing slides as well. And even though Moody's has said we'll keep our AAA credit rating, there's no guarantee that will continue. We still don't know what Standard & Poor's is going to do. It's always been believed they would be the ones most likely to downgrade to a AA. So that's still a big question mark, too.
Still waiting on that.
Not over.